begin tonight with the latest flare-up in China. Beijing announcing new security measures against Hong Kong, sending the Hang Seng to its worst day in almost 5 years. The move escalating tensions with the United States, with President Trump threatening, quote-unquote, strong reaction to that crackdown. So does China become a bigger headwind for the markets as we head into the summer? Pete Najarian, what do you say?
Yeah, Mel, it seems like there's always a different news story every single day that seems to lead us either up or down, right? I mean, on literally every day, whether it's earnings one day that we focus on that, the employment numbers the next day, China one other day, the virus, of course, and somebody having sort of a vaccine of some sort or another. There's always something leading the market. So what I was encouraged by today was the news yesterday and today about China and the U.S. and some of the issues that we're going to be facing probably going forward. It seems to me like we've shaken that off pretty well. It's been a pretty impressive ability of the markets to just say, you know what, because we could have very easily slid down today and been down 400 points going into the weekend like we were a Friday or two ago. So I was very encouraged by that. I continue to watch the volatility index, of course, extremely close. And I'm encouraged by the fact that we aren't seeing huge spikes anymore, and we're seeing this contracted movement. I think that's a much healthier environment. And by the way, I think that everybody wants to focus on the big five. It's not the big five. It's biotech. There's a lot of different areas of the marketplace that are giving us a foundation, I think, for more upside to come in the future.
We're either shaking off the worries about China or just not coming to grips with reality. Jeff Mills, what do you make of what is going on with China? I mean, what's also interesting is that the Communist Party has abandoned giving growth targets, which they normally do. Some say that could show that Xi Jinping may be a little bit on his back foot, that he's feeling a little bit cornered here because growth in China is slowing down and he needs to take control over Hong Kong before what could be a losing election for the Communist Party in September.
Yeah, look, I think it's indicative of the global growth picture. I mean, China withdrawing its growth forecast. We're seeing it with company earnings here in the U.S. And I would expect to see more tensions with China, quite frankly. I think you're going to see more bills come to Congress via unanimous consent. I think it's unpopular to try to block those bills now. And if you look at the dollar-yuan relationship, for example, I know there are other things going on, but it looks a lot more like it did pre-trade deal than it did after the trade deal. So I think it could be sniffing out some problems there. And really the bullish narrative right now, I think, is, massive fiscal and monetary stimulus, reopening progression, all of these things. And I just don't know in combination if that's going to be enough to drive earnings enough to justify the market where it is right now. If you look over the past 20 years, the correlation between the S&P 500 and forward EPS estimates is 0.9. Since the bottom on March 23rd, it's been the mirror image of that. It's been negative 0.9. So the market's been going up. Earnings estimates have been coming down, and I don't know that the economic environment is such that we're going to see a massive recovery in earnings estimates. And we've also talked about the pain trade being higher, and I was in that camp a couple of weeks ago. I think we're moving away from that. The put-call ratio, it's extremely low. It's actually below 0.53 right now. The last time that happened was January 2018, and then earlier this year. We all know what happened following both of those instances. And then also you're finally starting to see money flow out of money market funds, and now we're bumping up at the headwind of the 200-day moving average. So I think there's a lot of things against the market right now. I wouldn't be surprised for us to trade sort of sideways to down from here.
That's a lot for a bear to chew on, Mike Khouw. You agree with what Jeff Mills is saying?
I do, and also some of the things that Pete was saying as well. I mean, a couple of things that we can look at that basically the market's forward look at what we can expect over the coming months. The VIX index, which basically is a measure of the market's expectation of forward volatility, actually dropped a little bit today, even, despite this news that we were coming out of China. But the important thing is that China news, this is coming after day after day after day. It's this steady drip of just sort of increasingly negative sentiment on the China front. So I don't think that we should have anticipated necessarily that the market was going to sell off. Eventually, investors become a little bit anesthetized. When you continue to hear the same bad news, it doesn't have sort of the shock and awe that's going to drive the market lower. Instead, I think basically what Jeff is talking about is what we should be paying attention to, which is what do we really think EPS for a lot of these larger companies is going to look like going forward. Some of them, obviously, are more immune to what's going on, but others certainly are not. There are big swaths of publicly traded companies that are going to be facing considerable pressure for some period of time. And we've had quite a bounce off the bottom. And I actually kind of feel that if you have the opportunity, you might be wanting to pair some of those positions a little bit here.
I can completely see the bear case. At the same time, Brian Kelly, I mean, we know that companies are in for a tough road ahead. At the same time, I think that the reopening of America has happened probably faster than what a lot of people think. And I'm not talking about a complete reopening, of course, but all 50 states on some level have reopened to some degree. And I would think that that's probably a lot faster than what many people thought just a couple months ago when we were sort of in the depths of this pandemic.
Yeah, I think that's probably right. And I think, also the fact that we were unsure how people were going to react when things reopen. So when you start to see beaches reopen, and you start to see parks reopen, and they're crowded again, that's a different story. But, to me, if I look at the market here, we're talking about China and we're talking about the reopening and recovery from this vaccine. So the bull case here is that the Federal Reserve is going to pump enough liquidity, going to buy enough corporate bonds that companies can ride out the storm, however long that takes. The bear case is we get some kind of second wave and or we have a serious kind of trade dispute or deglobalization going on with China. To me, the deglobalization argument is is worse. I don't know if it's worse than the virus necessarily, but it's probably a longer term headwind for the market. So that's where we are. Those are the bull and the bear cases. And as Pete said at the beginning of the show, every day there's something else driving it. The market's trying to decide. Investors are trying to decide, and we're at a decision point in the market. So to me, if I look into the next couple weeks, I think that's going to determine what the next 6 months look like.
So this week we had a couple of notable performers, Pete Najarian, and I'm talking about Amazon, Facebook, new highs for both those stocks, really benefiting both of those stocks from being, being sheltered at home. Are those the sorts of names that carry us through post-pandemic, that bridge from Fed liquidity to getting us to the other side? Do we still stick with those internet names, those winners?
I think those names, but also I'd add a few names to that list, as a matter of fact, Mel. I mean, we all know the big five. They all sound great. And Facebook being a part of somewhere in that mix of stocks. But, it's all the verticals that Facebook has. And we talk about it all the time, but I don't know that everybody always pays attention to the idea that it's no longer a Facebook story of Facebook. It's Instagram, it's Messenger, it's all the other little aspects, even, the shopping element of this whole thing. So they're doing so many other things as well, including competing with Zoom. So there's all kinds of different areas that I think would make that a very favorable move to the upside, even from where it is right now. And I love the balance sheet. I think that's great. And Amazon's just Amazon. We know that. We all look at the PE. We always say, oh, boy, that's really high and this and that. But we know the strength of AWS and the power they've got. But there's other areas of the marketplace as well. And I think there's a lot of, for whatever reason, we don't talk as much about the big biotech names. We talk about all the smaller ones that are working on the virus. But if you take a look and you see some of the bigger names as well, they've been performing extremely well. The Amgens of the world and some of those kinds of names that trade much more like a pharmaceutical because they're so mature. But I think there's a lot of room still to the upside because I think a lot of these various names in different segments and sectors, I think that can power this market to the upside. So I tend to be a little bit more bullish than I think I'm hearing from a lot of the other guys. But a lot of that has to do with what's working now and what might be working, I think, even later as we get a little bit further along, as long as things stay positive, obviously, with what's going on with the pandemic.